There you go, 30 points in the green on the Nifty. So the start is decent. 19,500. Not only is it sustaining, but the bulls are powering ahead.
For the markets, 88 points higher on the Nifty. It's virtually at the day's high as we speak.
0.5%, but I think a good 0.5%. Nifty Bank, I think, is the more prominent index to watch because that has been in a more pronounced kind of straightforward, corrective kind of pattern. 150 points on the Nifty, and as I said, last 30 minutes and the last hour, pivotal for both the Nifty and the Bank Nifty, respectively. So these are strong gains that we will end.
Hello and welcome to Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Ekta Batra. Here are the top stories for this evening. The sensex and the Nifty hit a record high for the second straight session. Sensex gains over 250 points. Nifty ends above 19,700. Mid-cap index also hits an all-time high. HDFC Bank delivers a steady quarter. Standalone net interest income profit meets street estimates. 30% year-on-year growth in profit after tax is the best in 14 quarters. Asset quality also remains healthy. LTI Mindtree delivers in the first quarter of FY24. Reports that in-line repeat revenue and margins, however, witnesses a slight miss on the net profit front. D-Mart retail chain owner Avenue Supermarts misses street expectations as margins shrink on lower apparel and general merchandise contribution. Route Mobile corrects as the promoters enter into an agreement to sell an entire 57.56% stake to Proximus Opal and will subsequently pick up to 14.5% stake in Proximus Group in a later transaction. Angel One corrects after NSE prohibits onboarding of new authorized persons. Just Dial declines 2% despite a good first quarter. However, JSW Energy is under pressure after reporting a drop in consolidated net profit. All right, well, those were all of the top stories this evening. Let's also tell you what we have lined up for you this evening. It's a packed show as always. In Market Opinion, we have Sanjeev Prasad, Managing Director, Co-Head at Kotak Institutional Equities. In Big Corporate Voices, we have Shekhar Ghosh of Bandhan Bank and Prashant Jain, Joint MD and CEO at JSW Energy. Well, on to the day's market action then. The Lal Street scaled new peaks for the second consecutive session. The Sensex and the Nifty gained close to 1%, with the Nifty breaking above the 19,700 mark. However, the mid-cap index underperformed the blue chips to gain 0.25%, but still hit record highs. The banks were the star performers, with that index soaring 1.5%. PSE companies' market capitalization hit a new record of 303 lakh crore rupees. Prashant Nair is here with all of the details.
Well, the start was a little unsteady, unsure, but it became steadier as we progressed through the course of the day. And the market ending at the day's highest point, both on the Nifty and the Bank Nifty. Actually, it picked up pace in the last 30 minutes for the Nifty, starting 3 p.m. and starting 2:30 p.m. in the last 1 hour for the Nifty Bank. Mid-caps were okay, they were higher, but the real action was in small caps and micro caps. The small cap index ending about 0.9% in the green. Nifty large cap gainers to begin with, SBI, Wipro and Dr. Reddy's are the three which went up the most with volumes. But as I said, broader markets is where most of the action is, and the action has spread quite wide and far. So Z came back after Friday's 9% gains. It was up another 6% today. RBL Bank has been doing well. Mazgaon Dock 5%. Cochin Shipyard. Piramal Pharma is back above 100 rupees. Indiabulls Real Estate was a big one. Precision Camshaft 20% on Friday, 20% today. Atul Auto, Vaibhav Global, I mean, has not done well for a couple of years now, but out of the blue was up about 8%. There were losers as well, news-related mostly, or earnings-related. Route Mobile saw a large potential transaction. The markets did not like it. The stock was down. Bandhan Bank, earnings-related pressure. Same for Avenue Supermarts. Angel One, I mean, we highlighted the stock on Market Laser in the morning. The stock ending almost 8% in the red. Aptus Home Finance and Aarti Pharma were some of the others. It's a decent broader global backdrop to have as well, because the dollar and US yields both have corrected quite significantly in the last 5 or 6 trading sessions. On the Nifty, the level to watch, as we've been highlighting, is about 19,740. On the Nifty Bank, it's the recent prior high, which is about 45,655. Both levels to watch on the upside. Back to you.
Okay, all right, Prashant, thanks very much for that. So definitely a catalyst for today's trading session was HDFC Bank and the numbers it reported. In Market Opinion, Sanjeev Prasad, Managing Director, Co-Head at Kotak Institutional Equities, remains underweight on the IT space. he is unsure to see a pickup in discretionary spending. Speaking about the auto space, he added that volumes are not as strong.
We haven't really seen a big global slowdown. There has only been talk of a slowdown, but no real slowdown for whatever reasons. And actually, a second half slowdown is there, which we assume will be the case as far as global economic activity is concerned. I'm not very sure you will suddenly see a big pickup in discretionary spending by the IT sector, the consumers of the IT services companies. So I think this still has to play out in terms of probably more earning downgrades going forward. There's a lot of disruption coming in the sector going forward. And with multiples, really don't factor any sort of disruption which is coming in, whether it is the two-wheeler space, more competition coming in from the EV side, or whether the four-wheeler space, same problem over there. So if you have a combination of, somewhat muted demand, more competition coming in, and companies sitting on very high profitability profit pools, I think they're all ready for disruption. They will all decline going forward, and multiples will, come off very sharply from where they are. So autos are a strict no-no for me at this point in time.
Okay, so that's the opinion coming in from Sanjeev Prasad of Kotak. But on to the second headline now. HDFC Bank rallied over 2% after delivering what was a steady quarter. The bank's standalone profit and net interest income has met street estimates. Net profit has risen 30% year-on-year, and this is the best the bank has seen in the last 14 quarters. Abhishek Kothari is here with the details.
While steadiness continues for HDFC Bank in terms of its overall performance, the net interest income growth is about 21.1% YOY and about 1% sequentially, a bit below our poll on account of the increasing cost of funds. However, net interest margin on average asset basis remains steady at 4.1% when compared to 4.1% in the previous quarter. The fee income is a bit weak given the fact that loan growth is less than 1%. The fee income has actually declined by more than 5% on a sequential basis. So treasury income has been strong this time around. It's at about 552 crore when compared to losses in the same quarter last year and even in the previous quarter. So core operating profit is a bit soft this time around, growing at just 9.2% YOY and a decline of 2.35% sequentially. However, PAT growth is at 30% YOY. This growth rate of 30% is perhaps the best in last 14 quarters, and it's down just 0.8% sequentially. The RWA to advances have inched up a bit to 103.4% when compared to 99.1% in the previous quarter, which is perhaps one of the highest in last 15 quarters. CASA per branch, on the other hand, that's also one of the lowest that you are seeing in last 10 quarters. But across industry, CASA is a bit of daunting task in Q1. So SDB Financial has reported a good quarter as well. AUM growth is strong over there, 19% YOY and about 5% sequentially. Asset quality, one of the best that you are seeing in last 3 to 4 years. Gross NPA ratio is at 2.48% versus 2.73% in the previous quarter. Even the profit growth over there is strong at 28.5% YOY and about close to 4% sequentially. In terms of asset quality, gross NPA of HDFC Bank is at 1.17% when compared to 1.12% in the previous quarter. Seasonally, we do see agriculture NPA coming in Q1. Calculation shows that provision coverage ratio has remained steady at around 75%. So in terms of our poll, the NI is slightly below our poll. However, PAT is ahead of our poll. Back to you.
Okay, all right, Abhishek. Thanks very much for that. So that was on the HDFC Bank numbers. But on to the third headline today. LTI Mindtree has met street expectations in the first quarter of FY24. Net profit has come in at over 1,150 crores versus an expectation of over 1,190 crores. The stock rallied over 0.5% ahead of its results. Reema joins in with more details.
Now, LTI Mindtree has reported a soft quarter, but in line with street expectations. In fact, the management had also guided that Q1 is going to be a soft start, a bit of a lull quarter. So constant currency revenue growth for the company has come in at 0.1%. On a year-on-year basis, revenue growth is just at 8.2%, so no longer in double digit. Margins have expanded for the second consecutive quarter. They've come in at 16.7%. So there is an improvement compared to what we had in the December quarter. But the aspiration of the management is to get back to the margin levels that they had prior to the integration between the two companies. That's LTI and Mindtree, which is 17 to 18%. The deal wins are very, very robust. $1.4 billion, higher than the $1.35 billion in the prior quarter. Headcount continues to moderate, and attrition has ticked down. So last year, attrition numbers for LTI Mindtree were about 24%, and now it's down to 17.8%. But in a nutshell, these are largely inline numbers.
Okay, all right, Reema, thanks very much for that. So that's on LTI Mindtree. But more earning highlights. D-Mart retail chain owner Avenue Supermarts tumbled nearly 3% after reporting a miss on EBITDA and profits. However, on a yearly basis, the company has reported an 18% increase in revenue. Manglam is here with the details on D-Mart's numbers.
Well, Avenue Supermarts reported what was a weak operational performance this time around, and that was largely on account of weakness in consumer sentiment that aided their product mix, or rather led to a deterioration in their product mix. So let's talk about the numbers itself. On the top line, an 18.5% growth was largely in line with expectations, and that's because of the company having provided their first quarter update already. The second thing was that the gross margins of the company declined by about 110 basis points year on year, and that led to a near 130 basis points decline in their EBITDA. And as a result of which, both on the EBITDA front and the net profit front, there was a miss on Street's expectations. However, what was different this time around as against the previous few quarters was the management commentary, which was slightly more positive than earlier. They did say that, yes, there was weakness in consumer sentiment that impacted the performance of their general, merchandise as well as apparel part of their sales portfolio, but that is improving, and going forward it is likely to trend towards pre-COVID levels of 27-28%, which had dipped all the way down to about 20 to 22 odd percent itself. The stock was lower, brokerages were rather mixed. Those who were looking at the near-term weakness cut their target prices. However, those who were expecting this weakness to be cyclical and not structural have actually retained their buy ratings and outperform ratings on the stocks from the likes of Motilal Oswal as well as Macquarie.
Okay, all right, Manglam. Well, staying with the earnings, Bandhan Bank tumbled over 3% as well. This is after reporting an operationally weak first quarter. Asset quality slips, slippages and gross NPAs or gross non-performing assets rose in the first quarter. The bank's managing director and CEO, Chandrasekhar Ghosh, says that slippages will decline sequentially in the future.
Collection efficiency is going up now, so slippage has come down. Second is their recovery, whatever will be like to recover, 50% go to the ARC and 50% coming to us. That will be also helped us to reduce the NPA amount. Deposit growth of the bank has come 16.7% year-on-year basis. We have the good confidence with our deposit customers. They are coming and depositing their money on that. And CASA has come little bit down. Again, it will be come to up. And that will be like to help to the bank to maintain this, the CASA growth 40% in this financial year.
All right, time for a break now, but stay tuned. Lots of stocks in focus and other top stories. Welcome back. You're still tuned into markets today. Let's get to the rest of the headlines that we're tracking for you. Well, on to the fourth headline today. Root Mobile hit a fresh 52-week high, but then slipped in trade to end over 7% in the red. This is after news that the company's promoters will sell their entire stake to Proximus Group entity for about 6,000 crores. Reema's here with the details on this.
So Root Mobile was under pressure because the promoters are selling their entire stake in the company, that's 57.5% stake, at a price of 1,626 rupees per share. So the street is a bit worried about that. But that said, it's not that they're entirely exiting. By selling this 57.5% stake, they're pocketing close to about 5,900, 6,000 crore rupees. Of that, they will be investing about 50% of the proceeds to acquire a 14.5% stake in Proximus Opal, which is the company acquiring Root Mobile. So they've sold Root Mobile, but Root Mobile will get merged with a larger Belgium-based company called Proximus Opal, which has operations in the United States. And Root Mobile will have a 14.5% stake in a larger entity, which also houses the US business. So it's not that the promoters are entirely exiting. What's also interesting is that we've seen 3 deals in the CPaaS space in the last 2 months. There was one, Tanla Platforms, which said that they are acquiring Value First Digital Media Private Limited, which makes their business a lot bigger in India. The other one was Tata Communications, which acquired a US-based company called Kalera for $250 million EV. And now this acquisition, sellout by the promoters and merging, getting into the fold of a larger company for Root Mobile. So some, M&A is really hotting up in the CPaaS space.
Okay, all right, Reema, thanks very much for that. Well, let's move on to the fifth headline. Then Angel One slipped 7% after NSE prohibited onboarding of new authorized persons for 6 months, while CCL products stumbled nearly 7% after reporting a dip in margins on a yearly basis. Surbi is here with the details on this.
Thanks for that. So first on my radar is Angel One. Now, NSE has filed an order against the company. This is with regards to failure to monitor operations of its authorized persons. They have also issued a monetary penalty of close to 1.6 crores. They have prohibited from onboarding any new APs for a period of 6 months. And they said that Angel One has to conduct inspections of all its authorized persons and submit a report to the exchanges within the next 6 months. CCL products, on the back of their numbers, they've seen a good revenue growth of close to 30% on a year-on-year basis, but their gross margins and EBITDA margins were a little bit under the pressure. Gross margins have come in at close to 40% versus 41% same time last year, and EBITDA margins have come in at 16% versus 17%. We spoke to the management earlier, and they said that they are on track to achieve over 20% EBITDA margin for the full year, and also they maintain the 20% volume growth guidance for FY24. They say that EBITDA per kg still remains at similar levels of 100 to 110 rupees per kg, and premium products, which is currently 15 to 20% of their revenue, they aim to get it to 20 to 30% for FY24.
Okay, all right, Surbi, thanks very much for that. Well, in more earnings then, Just Dial declined 2% despite reporting what was a good set of first quarter numbers. The company's revenue growth jumped 33% on a yearly basis. Abhishek Bansal, the CFO of Just Dial, says they expect the B2B revenue contribution to increase 30% in the next few years.
The good part is right now we are seeing strong growth / recovery in both the B2C and B2B side of businesses. B2B definitely holds great potential. It can go to 30% plus contribution in next couple of years itself. We expect these margins to continue seeing sequential uptick, and we hope to take them to somewhere closer to pre-COVID levels by the end of the year. The key metrics are shaping up very well. The most important traffic, 171 million users, was up 16% year on year. And the good part is it has come at a very lesser advertising spend versus pre-COVID levels. Our collections last year were up about 44% year on year, which is translating into revenue growth this particular year. And this specific quarter as well, our collections were up about 28% year on year. So overall, while we do not issue any explicit guidance, things are looking quite optimistic for the rest of the year as well.
Okay, all right. Well, let's move on then. JSW Energy fell nearly 4% after reporting over 48% decline in consolidated profits. However, EBITDA increased almost 20% as compared to the same quarter last year. Meanwhile, brokerages continue to maintain a cautious stance on the company. Vivek is here with the details.
Well, a slightly muted set of numbers from JSW Energy this time around. While you're talking about the top line was impacted by lower realizations on the back of the fact that coal prices declined quite significantly in the quarter gone by. On the other hand, incremental revenue addition came in from the renewable portfolio, especially Mitra, as well as the other renewable energy additions that the company has done. Now, talking about the numbers themselves, revenue is lower by almost 3.5% on a year-on-year basis. EBITDA, however, was higher by almost 20% on the back of increased contribution from the Mitra assets. Margins came in at 41.7% versus 33.8% on a year-on-year basis. Profitability, however, was down almost 48% on a year-on-year basis. This is mainly on the back of the fact that there was a one-time impact of increased financing costs that the company had to undertake on back of the Mitra asset acquisition. So reported finance costs for Q1 was around 486 crore versus 193 crore on a year-on-year basis. And the company also attributed higher interest costs to the ongoing growth capex. On the back of that, most of the brokerages this time around continue to maintain a cautious stance on the company. What they're saying is that they're maintaining a sense stance. We're talking about Elara Capital. The target price has actually been kept at 242 rupees a share. What they're saying is that at this point of time, the stock is trading at quite expensive valuations at 28.8 times FY25 estimated price to earnings and almost 15.5 times FY25 estimated EV to EBITDA. On the back of that, there's a cautious stance. We did have the management of JSW Energy, where they highlighted all of the key developments that took place during the quarter. One more important development to track as far as JSW Energy is concerned is when the company could undertake any value unlocking as far as the renewable energy platform JSW Near is concerned.
I think we will be doing much better than that, and it will be achieved much ahead of the schedule. Around 80 crore of the EBITDA, which we are going to recoup in the balance 3 quarters from our hydro and Barmer asset, which are on the total PPA, but we had a lower generation and which will be totally recouped. Our total weighted average interest cost is 8.65% for the entire company as a whole, and similar is for the Mitra asset. The discussions are on. We are in discussion with some of the strategic investors who are very keen to take a pie into the Neo business. But I cannot put any kind of a timeline that when it is going to happen. But at some point of time, there will be a value unlocking event which we will be undertaking.
All right, on that note, it's a wrap on this edition of Markets Today. Thanks very much for watching.